Okay, folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond, and what we're going to be talking about today are our top 5 picks for the new trading week. We're going to be doing a freemium version. That's the version you're watching on YouTube. Or if you're a member, you're going to get the premium version where we do more of an in-depth analysis of the stocks we're looking to trade with price targets, entry points, as well as stop loss points and a trade strategy. Do we want to buy call options, put options? Do we want to sell put options or call options? What's going to be our strategy? We're going to talk about that again in greater detail. Lots of opportunity in the market these days. Our week last week was pretty good. We did initiate a trade on Goldman Sachs. That was one of our top 5 stocks going into the new trading week. I'll talk to you a little bit about that more, and I'll go over the other charts that I reviewed last week to see how they performed as well. So let's get to it. Let's talk about our attitude towards this market. And first, we're going to go to the CME Fed Watch tool. We'll talk about rates. Now, before we get into it, I want to remind everybody that it is Sunday. I'm telling you the obvious. But if it's Sunday, that means that it's Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Please join us there. We have a great time every Sunday night. Head on over to YouTube, and what you're seeing here is the live stream already set up. Click the subscribe button. You'll get notified. Click that little dingy bell that's out there, the notification bell. Or if you're not on our email list, we have a 5-part video tutorial on my top 5 favorite candlestick patterns. That's a link right here, and you just enter your email address. I don't even want your name. And you get my 5-part video tutorial, my top 5 favorite candlestick patterns, free of charge. And let's get to it. Let's start with the CME Fed Watch tool. So we've been talking about the fact that we're in a bullish market, but that the expectations for a rate cut have been pushed back quite a bit. I mean, this has changed dramatically, yet equities have held up. What's going on? What's going on is the fact that the market's at current. And I don't know when the pivot point is going to be reached where equities are not going to be able to go up any longer, simply based upon the fact that we are in pause mode, no more rate hikes. The market's been satisfied with that. Therefore, the equity markets are pressed up higher. Okay? There has to be a limitation to that. Now, on Friday, you saw bond yields pull back. Bonds rallied. Is that a trend? Not yet. I think that the trend is still down for bonds, still up for yields. And you're seeing that on multi-time frames, daily chart, weekly chart, even yearly charts. So when you take a look at the Fed Watch tool, what you're looking at is the fact that there's no expectation for a cut in March. May, no longer an expectation for a cut. June, very borderline here, whether or not we're going to get a cut. And July is still pretty firm with an 85% probability of a rate cut. So what do I think from here for equities? Because you are seeing the landscape change a little bit, meaning you have too few stocks driving the triple Qs up higher. The triple Qs have been the leader in recent months, recent years, but that's changed. I mean, the daily chart last week, Qs versus the S&P 500 got annihilated. Now, Qs versus the banks, however, is a different story. They were down entirely versus the banks, and here's why it's a different story, is that when you do the banks, the Qs were down relative to the S&P 500, relative to the banks. Now, which is stronger, the S&P 500 or the banks? Let's take a look. Let's get curious. And it's the bank stocks. Okay, that's better. So it's the bank stocks that are rallying relative to the S&P 500, relative to the Qs. Now, we don't have a big, strong trend yet. Let's go to a weekly chart. But we have a very, very solid base being built relative to the S&P 500. So while the technology names are beginning to peter out, and yes, you wouldn't know it by looking at SMCI or NVIDIA. You wouldn't know it by looking at those names. But when you look at them relative to Apple, looking at them relative to Google, relative to Tesla, I mean, certainly those names are lagging the triple Qs, the S&P 500, and most certainly the banks. So what I think we're going to have here is a bit of sector rotation and a bit of a leadership change for a while as technology consolidates. Because one thing we need to remember is that at current, we have a very expensive S&P 500. We're at multi-year highs on the S&P 500, but that's being driven by technology names. So we may have a bull market within the S&P 500, but we need to do our homework and find out what industries might be doing well relative to the overall market. And it looks as though the banks are going to do well. Why am I talking so much about the banks? Well, one of our top 5 picks last week was Goldman Sachs. Now, here's a weekly chart of Goldman Sachs, and it was up 1.72% on the week. Not bad. It was up higher, but it's looking really good here. It still looks really, really good. The problem for Goldman Sachs is that you have a lot of resistance at that 400 level. That's an all-time high. So we initiated a position, not a big position whatsoever. Now, if in fact we break out on Goldman Sachs above that 400 mark and we close there, well, different game. Then we're probably going to be building on that position and getting more aggressive to the long side with Goldman. Now, going into the new trading week, am I looking to add more to the long side? We used a call spread. What that means is I bought a deep in the money call option and I simultaneously sold a deep out of the money call option. That helps finance the trade and helps manage our risk a little bit. So do I want to buy more call options in advance of the breakout? Do I want to buy the stock in advance of the breakout? No, I'll probably sell some put spreads. That's the sale of a out of the money put and the purchase of a deeper out of the money put to help protect that position and just generate some cash flow while we wait. And what does that do when we're in this trade? Well, it helps offset, if not eliminate, the time decay on our long position of Goldman Sachs. So we're going to continue to build on this position as we move forward. I still like Goldman Sachs. I spoke last week about Bank of America as well. Bank of America closed off the lows of the week. It was down by a 0.5 percentage point, so I think we made the right pick here. The reason why I sided with Goldman Sachs is that it's more of a best-of-breed player, and there's also a lot less overhead supply on Goldman Sachs relative to Bank of America, which has several resistance levels above, where you go back to Goldman Sachs, you only have one, just one. Is it going to be a significant one to get through? Sure, yeah, it is. But once we get through it, and I'm confident that we will, well, then we're going to be in what you call clear blue skies, air quotes. Why do I do that? Clear blue skies means that once you get into clear blue skies, what that means is that there's no overhead supply. All the buyers that bought back here in November of 21 at the peak, well, they've either gotten out or they're satisfied now to be in the driver's seat again with their trade and enjoying the ride up higher. And there's no more sellers looking to get made whole above. This is why we want to take a look at Goldman Sachs and other names that don't have a lot of resistance above, so that when they do break out, those options go to work for us really, really quick. So we're going to stick with the Goldman Sachs trade. We're going to add to it as time goes by. Now, another trade that I spoke about last week was CCK, Crown Holdings. Now, it was up nearly 6.5% on the week. Now, we liked it because of the daily chart. Now, the daily chart, it was at an extreme oversold level, and we got a rally here. I forget why I didn't trade this. It fell off my radar screen. I think because it just broke out of the gate on Monday of last week. Yeah, it did. This was Monday, and I wasn't going to chase it. So, yeah, the horse left the stable before we can take advantage of it. So it's no longer on a watch list. And as a reminder, I want to bring you back to the weekly chart, because I warned last week that this was not an investment. Do not get too comfortable with the short squeeze that was inevitable, because while We expected a rally, which we got. And the shares can still move up higher. Don't get me wrong. I'm not saying sell the shares on Monday morning. They can still go up higher. But you're going to have a lot of resistance at around, let's call it, initially 78.44 per share, then up at around 82.50. That marks the prior lower band of support, which failed to hold, thus resulting in the recent correction in the stock price. So be careful here of CCK moving forward. Again, there may be more upside here, but the risk versus reward is no longer there. I would exit stage right on this trade while a part of it. Now, the other names that we were looking at going into the new trading week, SMCI, and all we really need to talk about here is the weekly chart. And while, yeah, we closed up because of NVIDIA's earnings, I think that it's going to take a lot for SMCI to break out and above these resistance levels at current. Doesn't mean it can't pull back, consolidate, and then continue up higher. We still have a trade here, an iron condor on SMCI. So in reality, with this trade, I would like to see it do a lot of nothing, which is a lot to request out of SMCI. I mean, traders love it. So they're moving it around a lot. But the thing that you can't forget is that on a weekly time frame, we have RSI at nearly 91. That hasn't changed. I think it was the 92 when we went into the new trading week. And we do have a lot of overhead supply here. So I think that you could do a very wide iron condor here. Other than that, you know, I'll leave it to the day traders to trade this one. I don't want to go to bed owning the shares because the shares just move way too much. You got to stay very, very small if you're purchasing the common stock. So that is SMCI. The other one was LHX, Level 3 Harris, weekly chart, and that was up 1.17%. I watched it. It's kind of a low beta stock, so I didn't get involved with it. I was interested in other names. So while we'll still keep an eye on it, I still think it's going to go up further. It's not one of my more high beta stocks where we're going to get a big run up higher in a quick amount of time, which is really what I want to see on a stock that I'm buying a call spread on. I want to get in. I want to get out quickly. And LHX, while I still like the chart, don't get me wrong, like it a lot, it just doesn't have that oomph. Now, there are other names out there that I'm going to talk about now that do have the oomph, the rocket fuel to make my day interesting. And there's many different ways that we're going to trade these names. We could use combinations of purchasing call spreads or selling put spreads. And we'll talk about that in the premium version. So if you're a member, don't forget, I have the week ahead commentary. That's our strategy session. It's posted in the members area. The premium version is going to be posted in the members area as well for this week's best stock charts. So go check it out if you're watching the freemium version on YouTube right now, members. And we have a 14-day free trial offer. Please feel free, sign up. You can always cancel. Go to the members area, cancel. There's a little button there, cancel. And that's how you do it. We don't put any drama into this. You don't want to be here, then don't be here. It's simple as that. And we have a great community, great Slack forum, great people. So please take advantage of 14-day free trial offer. Let's get to the stocks we're watching for the new trading week. And again, as a reminder, this is going to be a cursory overview on the freemium version. And then on the premium version, we're going to be going into entry points, stop loss points, price targets, and strategies. What do we want to do? Bear spread, put spread, call spread. What do we want to do here? Do we want to just buy the common stock? Okay, so let's get to it. Let's first kick it off with Amazon. Now, Amazon weekly view, beautiful week last week. Now, the thing to remember is that what we like to do here is that we like to take a look at how the stocks are performing relative to their sectors. Now, you may be saying, hey, Jesus, Bob, this is a QQQ name. Sure. You're right. And it is a triple Q name, quote unquote, technology. It has a big server business, but it is also consumer discretionary. It is, as I like to say, the pimp Mac Daddy, along with Walmart, of the consumer discretionary names. So how is it doing relative to the consumer discretionary names? Let's take a look. Relative basis versus XLY. Amazon is outperforming the sector. And this candlestick versus the XLY is very closely aligned with how Amazon looks on an individual basis. What you saw last week was a bullish key reversal. Let's go back to the saved chart. Bullish key reversal on Amazon. What does that mean? They tried to take it down after the prior week's bearish price action. And now the markets are telling you, you have support below. The problem is you have resistance above as well. So it's kind of caught between a rock and a hard place. So there are different strategies that I would want to employ here so that we don't see, if I want to put a call spread on, I don't want to see a lot of time decay. So we're going to offset that time decay with other strategies. So stick around. Amazon looking very, very good into the new trading week. Members, we're going to talk about where we want to get in, out, price target, and strategies in a moment. The next chart I want to talk about, I spoke about this quite a bit on Thursday night Stock Charts Live. It's on YouTube. You want to go check it out. I was very bullish on Airbnb, but I noted that it was down in the after-hours session. I couldn't figure it out. There's no headlines on Thinkorswim. And then after doing a little bit more analysis, I saw that Booking.com had reported that evening, and the shares were getting hammered in the after-hours session. So now I have my why behind why Airbnb was down. So I watched it on Friday to see how it performed. And yeah, it was down. It didn't recover. So I don't see myself running it on Monday morning looking to purchase the shares. But when you take a look at the weekly chart is very, very strong. We held the lower band of support last week. We are in a tight consolidation range. So when you take a look at Airbnb on a daily chart, one of the catalysts for us is the fact that you have the Bollinger Bands trading within the Keltner channels. The Bollinger Bands are in black, Keltner channels are in gray. And whenever you get this for any length of time, you're getting pressure built up, which usually, if it's in a uptrend, the stock or a commodity, whatever you're trading is in an uptrend, the resolution to that compression, that pressure is to the upside. So it looks as though Airbnb will get resolved to the upside. The question is when. So we're going to go into more detail again on the premium version. So members, check it out. And in the members area, I'll have listed the entry points, price targets, stop loss points. So check it out. Next chart up, Domino's Pizza, weekly view. Why do we like Domino's Pizza? A bunch of reasons. On a weekly chart, we are breaking out. Or I should say, we have broken out. Now, on a daily time frame, beautiful breakout on Friday. Here you have it. What else do you see here? We just went over it with Airbnb. You have your Bollinger Bands that are trading within the Keltner channels. That is a Bollinger Band squeeze. And it looks as though the resolution to this consolidation is now getting resolved and getting resolved quickly. So very bullish on Domino's Pizza moving into the new trading week. Members, we're going to be, again, I hate to keep repeating this, we're going to be talking about strategy in the premium version. So check it out. Sticking with the banks, I mentioned I was bullish on the banks earlier. This is one you probably never heard of, but the fundamentals of this bank are outstanding. First Citizens Bank shares. Now, I'm not great with the fundamentals. I farm that out to Investors Business Daily to tell me what I should think. Now, when it comes down to the technicals of the chart, that's what I do. So when I take a look at this chart here, it's just screaming that you need to consider putting on a long trade. Because what did we do last week? We broke out of a multi-week consolidation. Now, in a weekly view, the stock is a monster. Bullish key reversal bar. Again, one of my top 5 favorite candlestick patterns, linked below. And it is a monster. It's looking to break out further. Now, what I omitted about Airbnb, I want to take a step back for a moment. Sorry for going out of sequence here. I meant to talk about this. One of the catalysts for Airbnb moving up higher is the fact that you have the setup here for a potential short squeeze on Airbnb. Now, you may be looking at the short interest and saying, oh, it's only got 4.36% of the shares that are short. That doesn't sound like a lot, and it's not a lot. But when you take a look at the potential for a multi-day short squeeze on the share price, it's quite impressive. You have a total number of shares short of 19.19 million. Divide that by the average 3-month daily volume of about 5 million shares. That's about a good 4 days worth of a short covering rally, almost 4 days. So once this thing gets going in the upside direction, you're going to see shorts having to go cover those positions. So that could happen very, very quickly. It's probably already begun. So that's the other reason why I like Airbnb. So any pullback here I view as an opportunity for Airbnb. Now the last chart I'm going to be going over, and plus I have a bonus stock that I'm going to go over on the premium version. The last chart I'm going to be going over, and the reason why it's a bonus stock is that it's a very low float stock, low volume. I want to put an options trade on here. I don't want to show my cards to those that are out there looking to find their own trades. I don't need the competition to put on a position here. So I'll talk about it on the premium version. And we'll leave it off here with TDW Tidewater. It's a IBD darling, meaning Investors Business Daily darling. It's not a stock you're going to hear about all that often. And what I like about it is, besides the fact it's got awesome fundamentals, it broke out last week. And it also has the potential for, as we just discussed with Airbnb, the potential for a short squeeze. You have about a little over 4 million shares short, but only 700,000 shares per day are being traded. So it's fairly thinly traded. Yet you have all these shorts that are out there, and they're not covering. They're just sitting there, and they're waiting for their faces to get ripped off. Well, I want to help them. I want to help them along. So TDW, this is our catalyst, besides the technicals, for wanting to get long here. It's got great fundamentals. Quarterly earnings growth of 387%. Awesome. Momentum, weekly chart, higher highs. Stokes getting ready to break out of a consolidation. We broke out on price. Volume could have been a little bit better. It's the only thing I don't like about it. And when you go to a daily chart, before I leave here, I almost forget the most important part. Take a look at the Bollinger Bands. They're trading again within the Keltner channels. What does that mean? A Bollinger Band squeeze. And I think it's an awesome setup for the new trading week. And again, folks, we're going to be going into our entry points, stop loss points, and our price targets for these names. So if you're not currently a member, please sign up. Take advantage of the 14-day free trial offer. And members, we're going to segue on and over into the premium version now. Everyone else, I will catch you on Sunday Night Futures Live. Members, let's start talking about strategy on these names. Let's head back and do a recap of Amazon. And what I want to pay particular focus on with Amazon stock is the daily chart.